Welcome to your March tax briefing. We're going to connect the dots between the Chancellor's latest forecast, a huge digital tax switch, and, most importantly, what it all means for your wallet. So let's jump right in.
Everything we're about to cover really boils down to this one number, 38.5%. Now, this isn't just some random statistic. It comes straight from the government's own budget watchdog. And believe me, it tells a huge story about where UK taxes are heading. So, what is that 38.5%? Well, it's the projected tax burden as a share of our national income. And that's the highest it's been since the post-war era. To put it simply, it signals a tax environment that is going to feel heavier for pretty much everyone. So here's our game plan. First, we'll look at the big picture economic forecast. Then we'll dive into how that actually squeezes your paycheck. After that, we'll unpack the massive digital switch coming for the self-employed, cover some key updates for drivers and employers, and then wrap it all up with a clear action plan. Okay, so let's start with that spring forecast. This is the government's big economic statement, and it's where we get the first real clues about the financial year ahead. The main message coming from the Chancellor was one of restored stability and a big focus on growth. But, if you look just below the surface, the actual numbers tell a slightly different story. And you can see that contrast perfectly right here. On one hand, you've got the government's optimism, but on the other, you've got its own independent watchdog, the OBR, painting a much more cautious picture. They're calling the financial situation challenging. And it's this gap between the political message and the economic reality that is just so important to understand. So let's bring this down from the big abstract picture to your bottom line. What does a challenging forecast actually mean for your paycheck? The real engine behind this squeeze is the ongoing freeze on tax thresholds. Think about it. Your wages might rise just to keep up with inflation, but because these bands are frozen, you're much more likely to be pulled into a higher tax bracket without actually feeling any richer. It's a kind of stealth tax increase that economists call fiscal drag. And this whole phenomenon is set to have a huge impact on one group in particular, which brings us to this pretty startling number, 1 million. That's right, because as the state pension increases with inflation, it's on a collision course to rise above the frozen personal tax allowance. The result of that? Well, it could pull around 1 million more pensioners into paying income tax by 2031, many of them for the very first time. Okay, let's shift gears now from how much tax you pay to how you're going to report it. There's a massive change called making tax digital on the horizon, and the first wave of people will need to be ready for it starting this April. In simple terms, MTD is basically the end of the annual tax return as we know it for a lot of people. If you're self-employed or a landlord, you're going to have to start keeping digital records and send updates to HMRC every 3 months. It's a really fundamental shift in how tax is managed. And just look at the scale of this. Starting in April 2026, it's going to apply to anyone with business or property income over £50,000. HMRC estimates that's around 860,000 people who need to get ready for this right now. So in practice, it'll work something like this. First, you'll need to keep all your records digitally using compatible software. Second, you'll send quarterly summaries of your income and expenses to HMRC. And third, you'll file a final summary at the end of the year to confirm everything and make any adjustments. Next up, we've got some specific updates for those with company cars and for business owners who are managing their teams and vehicle fleets. Yep, the rules of the road and the office are changing. So, starting March 1st, we've got new advisory fuel rates. These are the official rates that employers can use to reimburse you for business miles in a company car, completely tax-free. You'll see rates for the bigger petrol and diesel engines are holding steady, but there are some interesting tweaks for different types of EV charging. Now for employers, a pool car sounds like a fantastic tax-free perk, right? But listen, the rules are incredibly strict. To qualify, the car has to be used by multiple employees. It cannot be kept at one person's home overnight, and any private use has to be purely incidental to a business trip. And if you think there might be some wiggle room, well, think again. A recent tribunal case is a really stark warning. A company had been operating for decades on an informal agreement with HMRC that their cars were pool cars. But a recent audit found the conditions weren't actually being met, and a tribunal sided with HMRC, landing the company with a huge bill. The lesson from that tribunal is crystal clear. The written rules are the only thing that matters. An informal agreement, even one from decades ago, offers zero protection if you aren't meeting the official conditions today. Okay, let's wrap all this up with the most important part, your action plan. What do you actually need to do and when do you need to do it by?
First, a direct question for you. Have you overpaid tax? You generally have 4 years to claim a refund, which means the deadline for the 2021/22 tax year is this coming April 5th. The clock is definitely ticking on that one.
If you are making a claim, you really need to be precise. HMRC requires a written claim that states the tax year, the exact amount, a clear reason for the overpayment, and a signed declaration that everything is correct. Getting those details right is absolutely critical for a successful claim. And finally, here's your immediate to-do list. April 5th marks the end of the tax year, so it's your last chance to use up any annual allowances, like your ISA allowance. Then, on April 6th, the new tax year begins, and all the new rates and rules we've just talked about will kick in. So, from a historic tax burden to a complete digital overhaul of the system, it's clear the ground is shifting under our feet. The question I want to leave you with is this. As the landscape changes, is your financial plan just reacting, or is it actually evolving to stay one step ahead?